Atul Suri, good morning. Thank you for joining us. Atul, frankly, I was hoping for a new look in this new normal. You're still sticking to your old look? Okay, this is the new normal surely when you're working from home. Sometimes we think the guests are ready, but they're not ready. Sometimes sometimes they cannot hear us. Sometimes audio is a problem. So this is the new normal where you will on a regular basis, I guess, see that we're trying to talk to the guest. Sometimes the guest cannot hear us. Sometimes we cannot hear the guest. So I mean, our viewers will actually appreciate and they would respect and they would understand that. Atul Suri is ready. Can we go to him? Well, Atul Suri, good morning. Thank you for joining us. Atul, I was hoping for a completely new look, so to speak, your appearance in this new normal, but you're sticking to the basics, the old look.
Yeah, that's okay. That's good. If it looks good, why not? If something's working, if you're with the trend, why not follow it? You don't have to keep doing something every day.
So what is working for you in the market, Atul? Have you been on the short side of the financials, because the enthusiasm with which you are saying that stick to what is working, the only thing working in this market is that every day if you short financials, you're making money.
Well, I'm a long only fund. I'm a PMS, so I definitely can't short. But the important thing is that, coming back to your question, that what was a darling sector, banking, financials, 6 months ago, definitely have fallen upon hard times. And that is a reflection of what's happening in the economy. Companies and sectors are getting re-rated. And as I said, there is a new normal. And you can see where we are. Like, let's say the Nifty is about 25 to 26% from the Feb highs. But something like the Bank Nifty is down 45%. So that really explains the shift that is happening. And this sector has the highest weightage on the Nifty. So it is really putting a lot of pressure on the market. And yes, the fact is that it's a new normal. A sector that was a favorite for the last 5 years has fallen out of favor. And that's the way it is, because we will all have to adjust to new realities in our lives. We have to adjust to new realities in the market, new sectors, new stocks. And that's the way it is, because nothing is constant. Change is the only constant, I think.
I'm going back to financials, Atul. It's large part of the weightage. It's like the heart of the market or perhaps the brain of the market. In this case, they both are not working. Where will markets go if 35-40% of the weightage is coming down?
It's going to be a process, Nikunj. It's not going to be a day or two. One thing is that if the large part of that has a massive depreciation in price, its weightage in the index itself comes down with this drop in market cap. However, you also see that you develop counterweights. Like, as I said, that the Nifty is down 27% from its Feb 12 top. You have a sector like pharma that is 4% positive. You have something like, I may have a vested interest in what I'm saying, but a stock like Reliance. Reliance by itself is such a giant and has a sectorial push to the market. Reliance is where it was on 12th Feb, which is around 1400. So what will happen is that it never, what seems like, oh, this is the end of it, never really works that way. The markets are very beautiful. They're very self-correcting. If one thing, which is the largest weight, falls out of favor, a lot of other spaces and opportunities will come up. And for me as a fund manager, that's the crux. For me to be able to beat the index, to be able to beat the benchmark, that is the only way I can justify my existence. And that is only possible if I'm able to navigate my portfolio away from what is moving out or where the trend is getting destroyed or destructed, and a lot of new places. So I look at the market as half full, as the glass is half full. Yes, we can talk about index levels, etc. But the fact is that there is a lot of new normals happening in our lives. If there are new normals happening in our lives, why have there not to be new normals in our portfolios, in our stocks? And I'd rather not be an ostrich and put my head in the sand. I think there are new realities, and it's very important that we adjust. And already you can see the benefits of that adjustment happening, because the move away for us from financials about 2 months ago towards pharma has played out pretty good. So I think that these are new realities, and it's very important that we adjust to.
Atul, is that your office? I see that you've already moved out of home, not working from home anymore.
Well, we have to find all sorts of permutation combinations, and these are the new realities, and you have to make the best of it.
Chalo, till the time it's an empty office. But talking about what's happening in the market and this tectonic shift that you were talking about to pharma, look what's happening with Telecom. And case in point being only two names here, and I'm going to keep Reliance outside, but just look what's happening in the charts of Bharti. I was just going through the entire list of brokerage upgrades post the earnings which came by yesterday. Not just a solid set of earnings, solid commentary, but look at the price targets. It's 700 plus across the board. What's happening here?
Yeah, so exactly, Aisha. A sector on a stock that has been out of favor for last many years suddenly becomes a market favorite. And that's what I call about change in trends. Because what is happening is that the trends are changing. The last major trend change we saw was in 2018. When we saw a big shift from the small and mid cap towards the large cap and quality. But now we are again going through another shift. And that is exactly the case in point that I said earlier, that there are new realities and new sectors. And it's very important to be realigning ourselves to these new realities. I mentioned pharma, telecom. I think that's another interesting place. I feel a lot of agri-based stories are also emerging. Again, you will notice that now the market is not differentiating a lot between large cap and mid cap. So if you see in the fall, the Nifty is down some 29% from the top. The mid cap index is 29% down. So it's falling at par. So what you saw, that differentiation that was happening between large cap, mid cap, has now really moved to sector specific. That is why you will find everything in, like the bank Nifty is down 45% in the same time. But there are some sectors and spaces. So I think the game has moved away from large cap and mid cap game. It has really moved towards sectors and themes. And as I said, that we have to see that what are going to be the beneficiaries of this new reality. And they can have massive, massive upsides from here. And that's what we are playing out. That's our thought process as trend investors. And every few years, you realize that this happens. See, I've been in the market for 30 years and I have seen 4 crashes. And I've really seen that the stocks that have outperformed in the up move tend to really underperform when the market's correct and for years to come. And each fall throws up new realities. And that's where your next 10 baggers, 100 baggers are. So I think as an investor, it's very important for us to, not, as I said, see the glass half full, not only half empty. The fact is that there are going to be new realities. And with new realities come new opportunities. And for me, the key point is that do I go out and grab them? And that's what we are doing, or that's what we are focused in our PMs.
Sure, point taken there, Atul. So what other than the spaces that we've talked about, pharma, telecom, etc., are you scouting for opportunities?
I think another space that we were overweight in and we have added is specialty chemicals and contract manufacturing. I think that there is also going to be a shift out of China. Now, whether India grabs it, how much it grabs it is a work in progress. We have been recently a bit disappointed with government action, so we don't know how much India will grab it. But one sector, one space where already this transition was happening for a few years, and the benefits will get further accentuated post this China falling out of favor is specialty chemicals. As I said, it's not a new trend. They have been doing very well. Unknown, unspoken, generally mid-cap spaces, but we don't even have an index for it. There are hardly any analysts who covered these stocks. But I think that these are going to be another very, very interesting space. As I said, we were overweight, but we've gone further overweight because I think that this is going to be another new normal. See, I just take a step back and, share my thoughts on the market. I know it's not the question, but most people are waiting that where is the bottom? And the question that everybody asks, will that 7,500 be the bottom? I personally think that we do not know the answer. Nobody knows the answer. Because the bottom is not going to be, this event is not going to end in one day. The bottoming is a process. And again, as I said, having seen 3 large bear markets earlier, I have seen that bottoming takes time at an index level. And in this phase, when the markets are bottoming out, the new leaders of the next bull market will emerge. And it is very important to be able to realign your portfolio. Why I say this is a bottoming out of markets or economies and things like that is because it is very clear to me that governments are realizing that you cannot have a lockdown forever. Already in a 3-month lockdown, governments and societies have been brought to their knees. We are seeing actually so much of upheaval economically and socially. Look at the way the migrant worker issue is panning out. You're getting a lot of videos and things like that. And that's so sad. So I don't think that governments can keep this lockdown for very long. They will have to open up the economy. They have to start economic activity. And before you find an anti-vaccine or an antiviral or what have you, that will come with time. Surely we'll make progress, but economies will have to open. Otherwise, governments realize it. And that is why you can see that though the number of cases in India are not coming down, in Mumbai for that matter also, but the economy is opening up, and that is very, very important. So the markets are going to reflect that. And the thing that we have to look for is not a one-day bottom, not a level whether 7,500 will hold or 8,000 will hold. It's going to be a process. But in this process, there are going to be lots of stocks and sectors which are going to be early leaders. And for us as investors, the important point is to be in those, because those are going to be the new leaders of the new reality.
We're going to have to leave it there today. Thanks so much for joining us and great chatting with you. Stay safe and stay well.